Today, I want to talk about how Citadel needs another bailout. I want to start by talking about this too big to fail ruling being discussed next week, but also discuss the multiple other bailouts Citadel has already received in the past. So stay tuned and let's make some money. Also guys, be sure to stick around to the end of the video for my big announcement regarding my fast moving momentum news plays. And now I'll dive straight in with the key information. So, Bigham's tweet is saying what the living fudge. So Citadel can become too big to fail and so that it's not just for banks any longer. He said this is what Ken Griffin has been trying for since 2008. So this screenshot says top US regulators are preparing to discuss plans that will make it easier for the government to stick firms other than banks with the costly systemically important label. And saying a systemically important financial institution designation places a firm under direct Federal Reserve oversight, something generally reserved just for banks. But StockSense Frank has clarified, saying the Dodd-Frank Wall Street Reform and Consumer Protection Act authorises the FSOC to designate a non-bank financial company for Federal Reserve supervision if it poses a threat to US financial stability. And saying this authority was actually created after the 2007 to 2009 financial crisis. So actually, many non-bank financial companies are already designated as too big to fail because they pose a risk to US financial stability. Actually, Citadel has been labelled too big to fail for some time now. That's why Citadel has already received multiple bailouts. They didn't just receive one bailout back in 2008, there's actually been multiple since then. The new proposed guidelines that are being discussed next week aims to establish a durable process for designating non-bank financial companies. Maybe this makes it easier for additional non-bank financial companies to be labelled as too big to fail. We know Citadel are already classed as too big to fail, but maybe additional hedge funds, market makers and institutions will be becoming too big to fail in the near future. I think it's important to note that this too big to fail label doesn't stop a squeeze, and it doesn't stop these hedge funds, market makers and institutions taking on losses. It just means these hedge funds, market makers and institutions do take the losses but also get a bailout. I can say that for a fact because there's been multiple instances over the last few years or over the last 10 to 15 years where Citadel did take on heavy losses, but the only reason they didn't end up collapsing as well is because they received a bailout. Those losses were still real, they still happened, people still made profit off of Citadel's back, but Citadel just received another taxpayer bailout. And that's why Bigham's added, saying this too big to fail label wouldn't stop a squeeze. It just means the dragon won't be slayed in the process. We would end up paying for it in future taxes and future inflation in the long run. So this basically means we still get the mother of all short squeezes, but the dragon, aka Citadel, isn't slayed. Bigham said his goal was to get the MOAS and to slay the dragon in the process. So let's go through those multiple previous instances where Citadel has actually already received a bailout. The first one that comes to mind is StockSense Frank tweeting, saying never forgive and never forget. Ken Griffin Citadel received at least $200 million in bailouts from taxpayers' money back in 2008. This article here confirms it, saying Citadel and Paloma Securities received $200 million of taxpayer dollars each between September and December 31st of 2008, according to the list of AIG counterparties released yesterday. And actually this $200 million of taxpayer bailouts is actually the smallest bailout Citadel has received in recent years. But we know those losses for Ken Griffin and for Citadel were very real and did indeed exist. You may remember the video from this screenshot where Ken Griffin is giving a speech on how Citadel nearly went bankrupt back in 2008. It was nearly margin called, it was nearly liquidated, and it was just moments away from going under. Citadel was doing everything they could to cut costs, stop paying bonuses, increasing layoffs, anything they could possibly do to keep the cash flowing just for a few more hours or a few more days. But as I said, that's not just the only bailout Citadel has received, and it's actually the smallest bailout they've received. This article here talks about a hedge fund bailout, which highlights how regulators ignored big risks. It says the Dodd-Frank financial law succeeded at making banks safer, but empowered shadowy corners of finance that nearly wrecked the system back in March of 2020. You can see here the article was updated in July of 2020, but it says to head off a devastating downward spiral, the Federal Reserve came to Wall Street's rescue for the second time in a dozen years. It says as investors sold a vast array of holdings and rushed to the comparative safety of cash, the Fed pledged to become a buyer of last resort to restore calm to critical markets, saying that Backstop bailed out many people and many investment firms, including a class of hedge funds that had been caught on the wrong side of a trade with ample risks. And don't forget, a Federal Reserve backstop, or the Fed buying up these securities, is indeed still a taxpayer bailout. Because where do you think the Fed gets the money to buy up these securities? From taxpayers. And that loss that the Fed had to backstop was what's known as the basis trade. And it says Citadel, Millennium and others were hit by losses in that basis trade. So Citadel again did take on very real and very existent losses. They were just effectively saved from collapse by the Fed backstopping that basis trade and buying those securities. It says the basis trade is a long-running investment that seeks to exploit pricing gaps between Treasury securities and futures. It says that Citadel, in a 2-week period between March 1st and March 13th, lost between 3 and 3.5% of its entire hedge fund. With a $200 to $300 billion hedge fund, that's between $6 to $9 billion in just a couple of weeks. The article doesn't specifically say how much cash the Fed used to backstop this basis trade market, but considering Citadel took on $6 to $9 billion in actual real losses, the bailout they received must have been significantly larger. And again, that's not the only bailout Citadel have received in recent years, because as this article says, Citadel's $1.15 billion cash infusion, we promise, isn't a bailout, but the final test of Ken Griffin's Death Star. Let's face it, for a hedge fund that manages over $200 billion and is supposedly worth over $22 billion as a result of this investment, Citadel shouldn't be needing $1 billion in cash. Citadel should have billions, if not tens of billions of dollars in free cash ready to go at any 1 second. But let's explain why that's not, and why all of Citadel's cash is tied up in liabilities, and why they are still desperate for cash and desperate for another bailout. As Jeremy tweeted, he said the ability to sell an unlimited number of non-existent shares in a publicly traded company gives a short seller the ultimate power to destroy and manipulate a company's share price at will. And while this is theoretically correct, because Citadel does have the power or the ability to sell an unlimited number of non-existent shares into the market, each one of those shares sold is indeed a liability. That's why in Citadel's liabilities section of their books, you have the security sold, not yet purchased figure. That's all of those shares they've shorted and likely haven't located and haven't bought back. So at any one time, that's a giant liability sat on their books. It's all the shares they've sold and shorted, synthetic and non-synthetic, and it's a giant liability that still exists every single day. And that's why when stock prices go up and when Citadel does have to close out of some of that short position, they're effectively desperate for outside cash to fund those purchases. And that's why Citadel likely is needing an additional bailout, even though they're already classed as too big to fail. Now, many of you have said, Tom, we absolutely love the fast-moving momentum news plays, but the community section of your YouTube channel isn't the best way to notify us. It doesn't give out phone notifications, it's hard to find, we have to check it every few minutes, and you only post one alert per day. So that's why I've created the Millionaire Mindset Trading Group to give you instant phone notifications, as well as my daily watch list and multiple alerts and plays every single day. I've also fleshed it out into a full-on trading group to include tons of educational videos that I'll be adding to every week, training you on fast-moving stocks, options plays, breakout trading, how to get out of trades and maximize your profits, and how to set the perfect stop loss to minimize your losses. There's also a weekly market recap and forecast. I've programmed in automated alerts for the S&P 500, Nvidia and Tesla, and there's also a ton of different watch lists for IPOs, earnings plays, and of course our fast moving stocks. And of course there's still our custom fast moving momentum news play alerts and even custom options plays as well. And the most important thing that sets this group apart from all others is that I'm so confident in my teaching that I'm giving a 100% guaranteed refund if the educational videos and trade ideas don't help you make a profitable trade in 30 days, no questions asked. On top of that, the Millionaire Mindset trading group isn't hundreds of dollars per month. It's $40 per month, which is less than $1.50 per day. And if that's still too much, there's even a cheaper tier at just $20 per month. So guys, be sure to sign up to the Millionaire Mindset trading group using the link in the description below. I also want to make it absolutely clear that this group won't be taking away from my AMC videos. I'm also not encouraging you to sell AMC to trade other shares. This group is for those of you that want to either A, earn some more money to buy even more AMC shares, or B, earn some money on the side for a new car, to pay down some debt, or to treat someone special in your life. But guys, be sure to let me know what you think down in the comments below. And as always guys, be sure to ding that notification bell, because that way you'll be alerted when I upload a new video. Cheers!